Well, it looks like the worst of it is over for now. However, is it over for good? And is the bull market now reignited? I'm seeing a lot of things online that people are saying that that was a one-time wipeout and that we should continue up from here, that the bounce was impressive. I disagree with that. We'll talk about it. I want to get into my thoughts on the market now. We're going to take a macro look very quickly, and then we're going to go down, being a day trading channel, we're going to go down to smaller time frames and have a look at how the model is playing out this week, where we've got our bounces, and being Thursday, should we expect a midweek reversal? So that's what we're going to get into. If you're new here, welcome. If you're returning, welcome back. I am Annie. This is Trade Travel Chill. Be sure to hit the like button nice and early and hit subscribe if you're not already subscribed. Now let's get into it. So I'm going to spend not too much time on the daily time frame for Bitcoin, but I do want to point out some key areas that you need to be very aware of before getting too excited and thinking we've had this massive bounce back. So I think the reason that people are excited right now is because from the week low, we have recovered to around about 17%, and everyone is calling this a massively impressive recovery, which it is at this point in time, but it doesn't necessarily mean that we are out of the worry for now and that there won't actually be a second wave to the downside. And that's what I want to kind of just caution you on for now, because in this first move down, we did take out a big liquidity zone. I've mentioned that zone many times on this channel, so you knew that it was coming. My target was around the 52K mark, and we did go lower than that. We actually went down into about 48, say 48 and a half kind of area. You know what? If we beat the target, that's even better, as long as we get the direction right. Once we hit that level, I did monitor for a while to decide whether or not to close my position for now. And you can see here on my Twitter, I did an update on the 5th of August when I closed that position that I was holding from $71,000, nearly $400. That was a position I was actually holding from this red candle right here after I identified this M formation. We had this pretty big retracement that was kind of scary to hold through, I'm not going to lie, but I did have confidence in my TA, and I did expect us to come down into the low 50s at least, and that it was just a matter of time. What we've got going on now is we don't actually have a massive amount of liquidity in this range now at all. We have a high level at the bottom of the range, and we have a high level at the top of the range. So at some point in time, they're going to come for one of those, and we need to just watch a market structure to decide which one is more likely at this point in time. Since that drop to the downside, in the last 3 days, we're kind of attempting a recovery, but whilst people call this an impressive recovery, I trade volume. And so when I look at the volume, I do not see anything that impresses me at all. As an example, you look at this red volume bar down here, and you can see how much volume was in that final candle there that, you know, essentially ended up stopping the momentum to the downside. But following that, we've had very low volume candles in this attempted recovery, and price currently on the daily time frame is under the 200 EMA. It's also under the 50 EMA, and it's under the 50% kind of area of this entire range. So we have to be very careful right now that this is not like a kind of a dead cat bounce type of move, right? Where price, after having a big sell-off, it attempts some sort of a recovery just to have you believe that the worst is over, and then it just continues to fail and go down to a lower level, you know, again, taking out lower liquidity. We talked about the yearly open, the significance of that on my last video, and it currently lines up with the 800 EMA. So there are some levels below that we still need to be aware of if this kind of dead cat bounce scenario does play out. The only thing that's going to change my mind and make me believe that that's not going to happen and we can turn bullish with confidence again is if this side here turns out to be a W formation or a V bottom, which I don't think it's a V bottom right now, because I would have seen volume come into the upside if it was going to be that, because a V bottom is like a final spike to the downside and then just doesn't give you a chance to get in. The volume just kind of takes off, and that's not what we're seeing in these 3 follow-up candles. So a W formation to form next within this range would give give me a little bit more confidence that, okay, maybe we're not coming down for this lower liquidity and instead we're probably going to head up for the higher liquidity. So I'm still in my kind of watching frame of mind. I'm not really bearish. I'm not really bullish. I'm essentially waiting for more confirmation when it comes to daily time frame analysis. And the key for me really is going to be to see how does price react around that 200 EMA, and if it goes beyond that, then around the 50 as well. So now that I know where I am on the higher time frame, and look, at the end of the day, when you are at the bottom of a higher time frame range, long positions on a shorter time frame are probably going to play you well, because you would expect it's going to attempt at least the halfway point or potentially the top. So a day trade from these lows into the halfway range, which is about 60, 61K, that's going to be a good day trade. So we can be short-term bullish on lower time frames, but on higher time frames, we don't have confirmation of anything yet. So now let's have a look at the 1 hour time frame to see how the model has played out this week. I did do an emergency update on Monday after we had this sell-off, and I did that in the UK session because I had a feeling the trend was going to change in US, and I just wanted to give you a bit of an idea of what to look for in order to close short positions and then open long positions. And so this here, when I got my confirmation, was when I closed that short position, and then I actually ended up going long right here. This is off the 15-minute time frame, and the chart that I'm showing you here is the 1 hour. So if I jump down to the 15-minute, you'll see it a little bit clearer, but I want to show you some other things on the 15-minute as well. But this here was the W formation. So what I said in that video was, as long as these trap traders in this wick stay trapped, then you would expect the trend to change when the US opens. And have a look at that green candle right on the US open. That was a very, very good US open candle, which is, US open can be scary because it can be manipulation, but in this case it worked out, so that was lucky. But I want to go back to the 1 hour time frame before we go down into the lower time frames, because what has happened since then is a little bit tricky, because we haven't really, in my opinion, we haven't seen follow-up rises since then. So after you have a W formation, we expect 3 levels of rise. That has played out on the 15-minute time frame, but it hasn't really, in my opinion, played out on the 1 hour time frame. And this is what has me thinking that even though I see price struggling here, which is at the low of the week, and usually if price breaks the low of the week, which it broke it here, you would usually expect that it will come back to retest it and reject again. Kind of acts like a support and resistance type of level. And we saw that happen here, and now we're kind of hanging around it. We've returned to it. So the low of the week is usually an area that you look for rejection. But the reason that I'm not looking for rejection is because when I understand the model that I trade, which quite simply is a W formation into 3 levels of rises, followed by a reversal pattern, which is an M formation, into 3 levels of drops, right? So when I trade this pattern, which usually plays out on the 1 hour time frame, usually takes 3 days to do this side and 3 days to do this side, then I don't see the 3 rises on the 1 hour time frame yet. So I also don't have a reversal kind of pattern. I don't have the M formation. So even though we had this sell-off yesterday, and this ended up being a Brinks trade, which is just it's a type of day trade if you're not aware of what it is, I don't actually think that the levels are complete on the 1 hour time frame yet, but I think we're also very, very fragile, and I think anything can happen, and that may make it a no trade zone unless you're just willing to take a chance on it. I always, when I'm uncertain, I just trust the system. I just trust the model that I trade, which is this, right? So if I'm like, oh, but this all looks weak and it might reject and da-da-da, and yeah, I can build all of those thoughts in my head, I come back to, but how many levels can I count? And I can really only count 1 level right through here. And the levels are counted off high volume vectors. So they're going to be the blue and the green candles when we're moving to the upside. The reason I'm not counting these green candles through here is they weren't actually high volume spikes when you have a look at this down here. So it is tricky, but I am thinking that we're probably going to break through this area of interest, or we should, if the remaining levels are going to play out, we should break through this level. And then, the target initially is going to be the 200 EMA. And if we break through that, then it's going to be the next area of interest up here at 61, 62K. Now, what does that line up with? If we go back to the daily time frame, the 61, 62K lines up with with the halfway mark. I might end up being wrong about this one, in all honesty, because like I said, the market is fragile and it's really, really uncertain. But instead of me getting emotional about that and reading the news and all that sort of stuff, I'm just going to stick with what I know as a trader. And as a trader, the move to the upside isn't invalidated to me yet. It's struggling, but it's not invalidated. So that's one or two things. You're either in the long with conviction. That doesn't make you bullish. That's only a short-term long with conviction. Or you're sitting out until something is more clearer, which is not a bad idea either, by the way, because, there's really not much volume here. If we do break through these levels and we do come up to this, say 61, 62 kind of area, obviously that means we're not getting midweek reversal today because we would be continuing the trend. That would have me believe that we probably won't have a midweek reversal this week, and maybe we will see more downside on Friday as part of the weekend trap. So we have to wait and see how the price goes today. But if this price does continue to the upside today, then I would be really, really cautious of tomorrow and potentially lock in some profits, move your stop losses, things like that. If we can get through Friday, we might be okay for a little bit longer, but it's just really, really uncertain right now. Like there's just in this entire area here, there's kind of no volume, which is like, what that tells you is that people are like, maybe I'll buy the dip, maybe I'll wait a bit longer, maybe I'll buy here, maybe I'll wait a bit longer. They're not like, yeah, buy the dip. You know what I mean? The price tells you that. The YouTube thumbnails tell you something completely freaking different, but let's not worry about that, right? So anyway, that aside, let's talk about the 15-minute time frame, and then I'm going to talk about XRP. Don't click off when I do. Please don't click off when I do. But, we have to talk about it. It's news. So this was the trade here, as I mentioned, the one that I covered on Twitter. We did this trade actually as part of the TTC trade challenge that we've got going on right now. It's only available to TTC members. So if you are interested in learning this method in full, there is a link to our website in the description of this video. And that gives you access to all of our courses and our community, as well as our private live sessions that happen multiple times a day as well. So this is a challenge that we're doing in our community at the moment. This profit has been taken on this trade. And this right here, this price action that we saw yesterday, it's loosely a reset pattern, which is, it's a little bit advanced to sort of cover on YouTube because it's not really going to make sense unless you really deeply understand the whole method in full. But the moral of the story is there's a picture that gets told between Asia to Asia after you have counted 3 levels. So whether they're a 3-level rise or a 3-level drop, whilst the 1 hour didn't get its 3 rises yet, the 15-minute did. So this is 15-minute rise 1, this is 2, and then up through here was 3, and that led into this kind of M formation. There's actually quite a couple of things that have happened here besides there being the reset. So Asia to Asia price action is essentially in the same spot, and UK runs the trend one way in between and US reverses it. That's the reset. There are different types of resets, but that's one of them. In addition to that, this was also a Brinks trade, which was almost a guaranteed trade of direction for that day. So a Brinks trade opens the US session or UK session with an inverted hammer on the opening candle, which is this red candle right here. And it forms the second side of the M formation, which was here. When you see that, which you hardly ever see it in crypto, like maybe once a year, it's a guarantee that that trend is going to run to the downside that day. So that was a really, really good day trade short for people who caught it, but it's not a huge trade. It's just even though there are no guarantees, the Brinks trade is the closest to a guaranteed trade that you can get. But with all of that combined, this whole price action here forms the reset, and a reset means that instead of getting your 3 levels up and your 3 levels down, you get your 3 levels one way, in this case up, and then you get the reset, and then your 3 levels start again. So if I'm identifying a reset on a 15-minute time frame, and I believe that there are more levels to go on the 1 hour time frame, then there should still be more upside to come. Hopefully that makes sense. This is a little bit more of an advanced video this time. Sorry if you're brand new here, but this is what the price action is giving me. And so this is, essentially what I have to talk about. So I'm not actually trading Bitcoin myself in this range. It feels like it's a range that is going to require a lot of attention. And I don't have that attention right now. So I would rather sit out. Like I said, profits have been taken on this trade. I'm happy for the week until I see a proper reversal, and I may come back to trade potentially tomorrow if it's looking like something is going to happen there. But if you are in a trade, if you are in a long position, the first thing that's going to happen over the next couple of sessions today is we want to break the initial high of the day, which is at 57,690. And if we can break that, then have a look for those other levels to the upside that I spoke about. But so far, I mean, UK's just started, but so far there's not much volume has come in UK. So you're probably going to be banking on the end of UK to bring it, or US. Now, I do believe that there is a news event today. Let me just check that. Yeah, this is 4:30 p.m. Dubai time. So it's about 4 hours after I'm filming this video. We do have unemployment claims, and that is going to be in the last hour of the UK session. So if you can see these dots down here, just in case you're not aware, this is our indicator. It's called market session times. You can get this, it's a free indicator, so you can put this on your own trading view, but you'll notice that certain dots have a different color here. And the reason that they have those dots is because that's when we expect the market to move. So that is, if you can be, that is definitely the times that you want to be available on the charts to get your trades. And especially when a news event lies around those times, then the news might be used as the excuse to make that move that essentially was going to happen anyway, right? So have a look around that. The unemployment might give us that move up towards the, I mean, it might give us a move down and invalidate everything I said, but that's trading. What can you do? But yeah, it might give us that move up and out. And then just, if that happens, just count your levels again after that and see if it's time to take profit on your long positions, and zoom out to the daily time frame and see where have we reached in relation to that. With the S&P and the NASDAQ, my shorts are still open on this, and that's because at this point in time, I have not seen a strong bounce off the 200 EMA on the daily time frame on either of them. This one here is the S&P, and what would have made me probably close my short would have been a strong, like a bullish engulfing hammer, something like that, a really strong move that, bounced off the 200 EMA and didn't return back to it. But we have returned back to it. So I'm giving it more time. I'm keeping this short open for now. I just simply don't have any reason to close it whilst the candles look like this. And the same thing goes for the NASDAQ as well, pretty much at its 200 EMA as well. So yeah, unless some speed and momentum comes into the upside, I'm remaining short on both of these. And before I move on to XRP, I just want to show you this Bitcoin chart right here. This chart was part of a blog that I did for our website explaining the funding fees that you are exposed to when you trade perpetual contracts and you hold trades for a long period of time. And what I've marked out here is days where I actually received money as part of the funding fees. So in case you're not aware, if you're trading perpetual contracts on basically any exchange, you're usually charged what is called a funding fee every 8 hours. And that can be a fee that you're charged or a fee that you earn depending on the exchange that you're on and also what side of the trade that you're on. So I did a little bit of an experiment to see how much this actually cost me, and I marked out the days where I actually received the funding fee as an extra profit and the days where I actually paid it out. And I documented all of that in a blog here. In case you're not aware, we have a ton of blogs on our website written by some highly intelligent people. Some of them are locked for members because obviously members have to get our highest level of alpha, but a lot of our blogs are free for anyone to read. And we have altcoin reviews here that is done by our fundamental and technical analyst that is on our team. His name is 𝗟𝗶𝗿𝗃. We also, very interestingly, do macroeconomics, which is not something I ever talk about on this channel, but we have got an amazing economist in our Discord. I'm going to actually try and sleaze him onto our channel one day if he will be willing to do it. But he breaks down in plain English what is going on in the world. Actually, I think that one might be a locked blog that you can't read. But anyway, see how you go. But this one here is the blog that I did on funding fees, which is open to anyone to read. And these sorts of things are things that you should really understand more about. And so I went through all of these fees to just help people kind of understand the costs of taking a trade, essentially. And also it helps you to understand why getting trading fee discounts is so important. And as you guys hopefully know, this channel really focuses on giving you as big a rebate as possible if you use our links to join an exchange. So all of the exchanges that we partner with are listed in the description of this video. If you click on those links, you will be entitled to those rebates. Now let's talk about XRP. So XRP had a bit of a pump today. We'll have a look at that in a second. The reason that it pumped is because they were given a $125 million penalty, which pretty much the crypto market considers to be a victory because the SEC was after 2 billion. So, you know, 2 billion, 125 is like kind of it's let off with a bit of a warning type deal, and 125 million in crypto is like slap on the wrist. So this has made people really excited, and as a result, XRP has had a bit of a pump today. This is XRP BTC, and it looks great, right? When you look at the chart, you've had a big long-term downtrend, you've had this accumulation, you've had the wicks turning to the bottoms of the candles, which means shorts are being trapped, and then you have the shift out so far. Great. We love a chart like this. We love a macro chart like this for long-term investing. But let's have a look at XRP USDT. The only problem that we have with the XRP USDT chart is that for a very long time, it's stuck in this range of about 41 cents to 71 cents. And every time it gets up to the top of that range, it pretty much just makes its way back down. Now, will that change this time? That remains to be seen. But if you're looking to offload some XRP for whatever reason, no judgment, not saying you should like XRP or not, I don't get emotional about coins. But if this is an opportunity that you see to take some profit at least, which is never a bad idea, on XRP, then just see how much closer it can get to the top of that range. If you're wanting to hold on to XRP, you again just make sure if it gets anywhere close to the top of this range that you're looking out for signs of reversal, because that's going to tell you probably not a good idea to keep holding, or at least just lock in some profit. You can't go broke locking in some profit. Keep some of it on the table if it's your let's see what happens coin. XRP is my let's see what happens coin. I haven't bought any in this cycle, but I bought XRP in the last 2 cycles, and I've always just had some XRP. I'm not emotionally tied to it. I don't care about it. It's never come back down to where I bought it because I initially bought it at 20 cents. So therefore, I've never actually been at risk of my XRP, you know, costing, mind you, I've taken tons of profit along the way. So all I really have left is 100% risk-free moon bag. If it went to 0, I still don't lose because I've cashed out along the way, which is essentially what I'm telling you, is that if you own XRP and you're enjoying this pump for the moment, just know that the only problem with XRP is that it pumps on good news, but it rarely tends to last. It usually just has a full retracement back, pumps. I don't even know what the news could have been, but I will tell you this was probably news, came right back. This was probably news, came right back. So just be here as well, probably news, came right back. So just be a little bit careful of this. At least it's all over, right? At least everything's all over for them. I'm pretty sure it's all fully over. I probably actually shouldn't say that because I don't research these things. Watch another channel for that sort of information. I just talk about price action. And according to the price action, you want to make sure if it can break out above this level that it's at now and it makes its way to the top, have a look for rejection kind of confirmations there, as that's going to be your hint to lock in some profit on XRP. As long as you've locked in that profit, you can keep a little bit in it and let it go for the rest of the cycle. Who cares, right?